Money FM 89.3, best of breakfast. The U.S. Market Update with Money FM 89.3.
All right, good morning, folks. Here's your look at how markets wrapped up last night on Wall Street. A bit of a case of Monday blues as we see some pullback happening. The Dow Jones Industrial Average down 0.5%, lower by 200 points or so, settling at 43,975. The S&P 500 lost 0.3% to 6,373. And we have the Nasdaq Composite pretty much the same, down 0.3%. So traders bracing for some inflation numbers due later this week and largely ignoring a positive development on the trade front. So let's check in now with Joseph Shaposhnik. He is the founder and CEO of Rainwater Equity. Joseph, how are you doing today?
Fantastic. Great to be with you.
All right. It's a pleasure to have you on the show. Let's start first with your look at how things have shaped up for markets. And it's interesting to see how we are seeing a bit of a pullback, despite what might be, well, to some folks, a positive development on the trade front that can be kicked down the road when it comes to U.S.-China trade.
Well, I think that the market is digesting really strong earnings from the Mag 7 last week. Microsoft with phenomenal earnings, revenue growing 18%, profits growing 24%. They're investing significantly in AI to drive revenues higher over the next couple of years. You look at some of the other earnings that came out. Google was strong. Apple was solid. So, we've had rallies in some of those stocks, and with nothing wrong with taking a little bit of a breather before hopefully we resume the move higher.
All right. So on that front, how optimistic are you still with what's been announced with the earnings, especially around the Mag 7? Is that still a play that you're bullish on or overweight on?
Well, look, our strategy is to invest in recurring revenue businesses that are run by great leaders that generate free cash flow. And, as tariffs have become a more significant driver and risk factor in markets, recurring revenue businesses are less exposed to that issue. So we favor those businesses like Microsoft, which have 90% recurring revenue tied to contracts. Broadcom, another company, which has 50% of recurring revenues tied to long-term contracts. Constellation Software, the same thing. These businesses are growing 15 to 20% a year and are not going to be particularly affected by tariffs. And their results and projected results for Broadcom, at least, which hasn't reported quite yet, are very, very strong. So that's what we like in this market. Certainly the Mag 7 is substantially more expensive than that of the rest of the market, the magnificent 493, and certainly more expensive than markets and stocks outside the United States. So the bar for them to continue to go higher is significantly higher than that of the other stocks. And so, we're picking our spots among the beneficiaries of AI and the magnificent 493 because valuations in that group of businesses is much more attractive. And so the portfolio is a mixture of those technology stocks that fit the recurring revenue approach of Rainwater Equity, but also of the businesses that are not in the Mag 7 as well.
Yeah, talking about valuations, how much momentum or support are you seeing from the wider markets when you look at how we've been grinding higher every other week to new record highs? Are you seeing that rotation to the rest of the market, the breadth of the market, so to speak?
I think so. But, these rallies tend to be relatively uneven. And what we see this year is markets outside the United States outperforming the U.S. market. And, I think a lot of that has to do with valuation. If you look at S&P 500 earnings are projected to grow 15% for U.S. businesses, and that's really strong. So the returns on the S&P 500 have trailed that 15% marker so far this year. But there are a lot of businesses that have done much better than the S&P 500, obviously. And, technology has benefited. A couple of other areas have benefited as well. But it's very difficult for the U.S. market to go substantially higher in the near term without AI and cloud businesses driving the markets higher, in my view.
Yeah, talking about AI, how much are you expecting when it comes to productivity gains being translated into some of the earnings? And also on the point of earnings, how much are you hearing when it comes to concerns around the tariff environment, where I suppose there is also that factor where things might get more expensive for corporates as well?
There's a lot of good questions in that one question, I have to say. But look, if I take the first question first, if you look at Microsoft Copilot and their ability to monetize Copilot and drive efficiency gains for customers, it's very substantial. They've seen significant uptake of the product. They've been able to obviously upsell the business customer on the product, and the customers seem to be extremely satisfied. And so they're driving significant ASP growth from the incorporation of AI to the customer. So I think it's very meaningful. And when I talk to folks that are in the investment management industry, the usage of AI to either ameliorate what analysts can deliver or replace analysts and make themselves more efficient is huge. The applications are very, very significant. If you look at applications in the areas of compliance, huge applications and new businesses being created that'll make everybody's lives a little bit easier and more efficient and maybe save people a lot of money. So I think there's a lot of opportunity for efficiency, and I think we're seeing that in the numbers. Microsoft obviously with spectacular results, and much of that related to being able to monetize their investment in AI.
Okay, so talking about earnings as well, on the currency front, how much are you seeing the softer US dollar being a factor as well when it comes to better earnings down the road, perhaps, of some of these Mag 7 names?
I think it will be a factor. And going back to your other question associated with tariffs, there are winners and losers. Throughout earnings season, we see businesses that are exposed to government spending that have been doged or their businesses have been reduced. Those stocks were clobbered. I'm thinking about businesses like Gartner, which sells information to corporates and to the government. And just, the stock was down 35%. And this is like one of the darling growth stocks in the United States. And there are a lot of stocks that have been negatively impacted by tariffs because you see that corporates are shifting the way they spend. They're trying to get more efficient because they know that some of these tariffs will be affecting demand. And you see that in digital advertising businesses where some advertisers have pulled back on spend. So in the near term, it's definitely having impacts on U.S. businesses, U.S. business investment, just in the reconfiguration of the way businesses spend and invest because their supply chains are being reconfigured.
Okay, so a lot of moving parts to watch out for, especially as we continue to get more developments on the trade front. And helping us to navigate what is happening in the markets, we've got Joseph Shaposhnik. He is the founder and CEO of Rainwater Equity. Joseph, thank you again for your time and insights. Great chatting with you.
Great chatting with you too. Bye-bye.
See ya. All right, stay with us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.